We welcome you all to the Somany Ceramics 3Q 9-month FY2024 earnings phone call, hosted by Asian Market Securities. From the management side, we have Mr. Somany, Managing Director, Mr. Shailesh Raj, CFO, and Kumar Smith, Head Strategy IR, and Namaya Somany, Manager. I will now hand over the call to Abhishek sir for his opening remark, and post which we shall open the floor for Q&A. Over to you, Abhishek. Thank you.
Thank you so much. Welcome, ladies and gentlemen, for the earnings call for Quarter 3. This quarter has been a muted quarter for the entire industry.
This call is now being recorded.
Good afternoon, ladies and gentlemen. Welcome to the earnings call for Q3 for Somany Ceramics. Joined with me are Srivat Somany, my brother, who looks after the bathware business, and Shailesh, CFO, and Kumar Smith, his colleague. This quarter, we have had a muted growth, as with most of the industry. It's been a flattish quarter for us. Capacity utilization, as a result, has been down from 91% in Q2 to about 82%, so about 8 to 9% down in capacity utilization in the tiles business. We have regrown a little bit, which is basically more or less a flat quarter. However, costs have been under control, so the EBITDA, the PBT and the PAT has become better. That is largely on the backing of a lot of our non-performing JV, which has started performing. Material has been moved from there, and we've done a lot of line balancing. If you remember, I had mentioned this in Q2. That has paid results. Q2, we had broken even in pretty much every JV, and in Q3, all are in profit. And going forward, that would be the same trend. It would only get better from here for the JVs. The overall capacity utilization is at 81%. The ceramic, PVT, and GVT mix pretty much remains the same. In favor of GVT, we've gone up to 34% from 32%. And ceramic and PVT have come down, ceramics has come down to 36% and PVT remains flat. Bathware, we have grown at 8%, 16% is for bath fittings, and mere 3% is for the sanitary ware business. Overall gas pricing, just the gas pricing, not my blended cost of other fuels, just the gas cost has been approximately at 44, and we believe that this will remain in the range of between 46 and 47 for this quarter 4, but I can get back to you with the blended cost at a later time of the various other fuels which we're using. This is purely for gas. Other than that, the average capacity utilization for sanitary ware has been 60, and for faucets it's a healthy 80, which is better than the last quarter. We have kept our focus on the balance sheet, and there we've improved a little bit or remained more or less flat. Our short-term borrowing has gone down at a Concall level. The debtor days are at 40, which remains the same even though the market has been under pressure. Inventories has remained flat, and creditors again from 56 to 78. The total working capital days is at 10 days. The total debt in the JVs, which is generally a question where Somany Ceramics has no guarantee, it's a standalone debt at the standalone JV level, is about 324 crores, out of which 2 of the entities have the bulk of the debt, which is Sudha Somany, the South plant, which is 140, and 85 in the brand new Max plant. I'm glad to announce that we have concluded the share buyback of 125 crore rupees. That went very successfully, and it was oversubscribed approximately six times. Other than that, the other highlights are the Max plant, the Somany Max plant. We have started commercial production on the 29th of January. The plant was fired in early part of Q3, which is October. And we have started commercial production in Jan 29. That was launched in Bombay and in Delhi and was very well received. Part 1 of the launch was the thick 15 mm tile, and we will now be doing another launch for the 9 mm tile. This particular product we have re-engineered, and we are really not calling it a tile. We're calling it Coverstone. The brand name has been kept as Coverstone, which is going to be taking on to other slabs, tile slabs, marble, granite, and other materials. So we are actually not calling it a tile, although it is ceramic, but it is called Coverstone. So the brand positioning is also changing to that effect. The other highlight is the SRE bonds. We had an 18.44 crore rupees of SRE bonds, out of which we have received a resolution plan from the authorities of 4.61 crore rupees, which we will get back in time, out of which 1.3 crore rupees is already received, and the balance also will be received within the next couple of quarters, is what we are given to understand. So approximately 30% of the 18.44 will be recovered. Another highlight is we have invested, the board has decided to invest in solar power to reduce our electricity bill for the Haryana plant. So 3.76 crore rupees we are investing in solar power SPV. So that should start getting benefit from Q3 of this year, hopefully. Lastly, the advertising spend have gone up for us. We have concentrated a lot on advertising and further brand building, which has also helped us deepen our penetration in distribution. The net distribution addition this year will be in line with last year, approximately 300 new dealers, net addition of dealers. And the advertising spend is approximately 3% higher than the rest of the spend, and we will maintain the 2.75% of the annual spend for our advertising. You would have seen a lot of our advertising on TV lately, a lot more in the south of India, because that's where our maximum concentration was. As you can see, the EBITDA and the PBT and PAT are healthily growing, and we are hoping that this will only get better in Q4. As far as the guidance for Q4 is concerned, we do believe that we will be able to drive growth of between 5 and 7% in Q4. And for next year, we should be able to do 5-6% higher than industry growth as far as the growth is concerned. As far as the EBITDA is concerned, the EBITDA this year, this quarter also would have been 10 plus, but it was owing to the lower capacity utilization of our standalone plant, of our own plant. Therefore, we have not been able to achieve 10%, but we're pretty sure that would be the figure in Q4, anywhere between the current figure and 10%, maybe a little more, depending on the sale. And next year, again, we should be this quarter has been muted, but the long-term view is very positive. If you've seen in the budget, they've been extremely positive towards housing. So I think we're very, very well poised to start utilizing all our capacity in the next year. All the new capacity which we have put in, which is approximately 600 crore rupees of investment in the last 24 months, all of that will come into stream, and we should see capacity utilization upwards of 90% for next year. Extremely bullish for next year, and these hiccups are part of the game, so really not very concerned. We do keep our focus on the balance sheet, so going forward, there's a lot of headroom to only improve from here. So this is the 4 highlights and the general working of the company, and I'm now happy to open the floor to Q&A. Thank you so much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hello. Thank you for the opportunity. I want to understand more about demand in Q3. So till H1 we are seeing demand, 6-7% volume growth. All of a sudden there is a drop in Q3. So what has changed? We are expecting demand to pick up. Still no color is visible. So what is your sense on the demand side?
So I think the demand since October has literally tanked for pretty much every industry, be it sanitary ware, bath fittings. I understand that even industry leader Jaguar is lagging this quarter. So overall the demand has come off in especially in the north. So that's been a little bit of a concern. But it's not something so significant which one needs to worry about. So it's flat for pretty much everybody. Most of the industries in the building material have faced it, other than the pipes.
Understood. But how should we see, the industry leader, demand momentum remains same what they have done in H1. So they did better, or possibly we have not done good. How should we read this?
Yeah. So they had the launch of their big slab plant in September, and that got into commercial production. So they were able to push approximately 30-35 crore rupees of material in the quarter 3, considering they had started the plant in quarter 2 itself. So they got that boost. Other than that, they have done better sales than us in the south of India. Those are the two highlights where they have done that extra 50-60 crore rupees of sales. So we should be able to make it up because we are doing our launch of the same product very soon, either this month or sometime early next month. So we should be able to cover some of the growth, and next year looks extremely positive.
Understood. So coming to the bathware and sanitary ware side, still it's a low, double-digit type of a growth. When should we, expect the growth like 20-30%? And if you can give individual split of sanitary ware and bathware growth.
I don't see it growing at 20%, but I do see it growing at between 12 and 15%. And this quarter, we've had a little bit of a slow growth in sanitary ware, but bath fittings has grown at 16%. So overall blended is about 9.5% growth. We should be able to do anywhere between 12 and 16% for next year, pretty certainly.
Okay. But why will the target be something like 15% on such a small business? Possibly, why not target something like 20-30 to possibly gain some market share?
The reason for that, sir, is that at the end of the day, when you go out to buy sanitary ware, you're still not thinking of the challenger brands like us. You still think of buying sanitary ware out of Hindware, Parryware, Cera, Kohler, etc. It's the same story for every other brand. So if you want to buy, let's say, sanitary ware, you're not thinking of Astral or you're not thinking of Asian Paints. They also make the same thing. So I think we're in that cycle. So a lot more advertising has to be done for people to really even recognize us as a sanitary ware brand. So this is a slow, time-taking process. Now at a 300 crore rupee level, I don't think 20-25% growth would be possible unless we disproportionately spend on advertising, which we are trying to, but beyond the point, it is, it's not sustainable.
Understood. Point taken. So quarter 3, can you give location-wise gas cost bifurcation?
Yeah. So in the north we had 42, Morbi was 47, and south was 54.
Okay.
So 54 rupees per standard cubic meter.
Yeah, got it. One last question from my side. As there is a export slowdown from Morbi and possibly the year-end approaching, should we expect higher incentive which might lead to more correction in realization that might can put pressure on margin side?
No.
No, nothing of this. Okay. Thank you. That's it.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. We'll move on to the next question. That is on the line of Sneha from Nuvama. Please go ahead.
Thanks a lot for the opportunity, sir. Just a couple of questions from my end. In your presentation, there's a other segment that we could see. Is that the adhesives business that we are doing? If yes, what's the strategy here? Are we doing trading? What's the number looking like, and what's the vision here?
Yeah, so that's adhesive, and we're looking at growing that aggressively. It's adhesives and a little bit of other things, geysers, adhesives, etc. So we should be growing that as a building material, as a construction chemical division going forward. But currently it's limited to adhesive and geysers.
Understood. Secondly, just wanted to get your clarity in terms of what the capex going ahead, and what was the response from the recent product launch that we saw, which was the cover stone plant.
So the capex plan for the next 12 months is nothing other than maybe 15-20 crore rupees, which will be going into the Nepal project. Other than that, and that we're looking at, I forgot to mention that, we're looking at commercial production somewhere at Q3 of this year. That is the only capex. Other than that, it's the routine capex. As far as the product launch is concerned, we broke up the product launch into two verticals. One is Coverstone 15, which is the 15 millimeter tile. That's a very difficult tile to produce and many bodies. That's got a good response. Obviously, the sales of that particular product is not super high, but we thought of doing that first because if we had launched the 9 millimeter tile, we would have been overwhelmed by servicing the market, and then this 15 would have got very delayed. So we took a commercial call, an executive decision taken by me to do the 15 millimeter first, which took a month and a half to 2 to develop, because otherwise from moving from 9 and taking a gap of month and a half to 2 to develop the 15 would have been impossible. 9 is a very easy product, the 9 millimeter. So what we did is we did that launch first, which was very well received in the market. It's a beautiful product. It's much better than anybody in the competition, even industry leader for that matter. And now the second launch is going to be done in this quarter, which would be for the 9 millimeters. We are preparing for that, and that would we will be launching fairly quickly. And that was the difference which was there between us in Q3 and between us and industry leader. We should be able to push that material very aggressively. That's the more of the vanilla item, so to say, from a big slab point of view. It's really not vanilla, but it's a relative statement I'm making for the big slab plant.
Understood, sir. Got that. Thanks a lot, sir, and all the very best.
Thank you. The next question is from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir. My question is related to Indian exports of ceramic products. Can you tell us how much exports are impacted due to the Red Sea disruptions? How much cost of transportation has increased? And after all, are you still able to compete in the European market with the competitors? That's the first one.
So I am really the wrong person to ask this question because our export is under 3% of revenue. We don't get so impacted because we supply more value-added products which are not super price sensitive. Our average realization in export is absolutely identical to India, maybe slightly better. And it's to 71 countries, so we're the wrong people to do. Our total export this year would be about 60-65 crore rupees. I think this question would be better answered, in all fairness, by somebody in Morbi, who does massive exports. That particular industry is doing 23,000 crore rupees this year of exports. But what I do understand is that it has had a little bit of an impact in exports. But these are all momentary, temporary impacts. It will sort out, and the demand will again boost. Your second question was.
Sir, my second question is, as you said, you are the right person to get more knowledge on the export side. So, considering the slowdown in exports, also wanted to know the domestic demand. So, how it is panning out, and do you feel any kind of a pressure on the domestic demand side?
So, a lot of the plants which were export-oriented haven't been able to really push too much material in the domestic because they're kind of unbranded. They mostly are OEM suppliers. But yes, there has been pressure of that also in Q3 and continues to be in Q4, but nothing more than what it was there in Q3. Q3 was as bad because Europe continues to completely shuts down, and all the Christmas shopping is done in October. November, December is completely dead as far as any shipment is concerned. I think this would remain the same in the next quarter because of the Red Sea issue.
And last one, as you mentioned, the gas cost of rupees 47 per SCM for the Gujarat region. Is this a piped natural gas or propane?
I'm talking of only natural gas. The blended, we do use some rice husk and mustard, turi, etc., etc. The blended cost of that is slightly lower. What I mentioned is purely natural gas.
Okay, thanks a lot, sir.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Karan Patelia from Asian Market Securities. Please go ahead.
Am I audible?
Yes, sir. Please proceed.
Yeah. Abhishek, it's quite some time that Modi is due price hike because we've seen some increase in Gujarat gas prices, but they haven't taken a price hike yet. So how do you see selling price shaping up for Morbi as a region?
Selling price in Morbi has only gone down. They've discounted material. They've also increased their evasion. So on both accounts, they haven't been able to take in this pressured market any gas price hikes. So they haven't been able to pass it on. So that continues to be the same. And I don't think the Morbi price is going to go up now. It's already went up to 47, maybe a rupee or two here and there. I doubt they'll put up any pricing in this quarter. They'll probably be concentrating on selling more volumes.
Right. And also with the fact that export remains slightly challenging given the macro environment. Have we seen some dumping to the domestic market, or they prefer to take a cut on the production?
They have taken a cut on production. They're under 70% capacity utilization. But this could be channel checked again, or maybe Morbi checked again by you guys. You can get this exact amount from the three associations there.
True. We did wonderful work with respect to balance sheet quality. So how do you see your debt repayment on the Concall level for next 2 years and the stable working capital profile from here on?
I'll let Sailesh, our CFO, answer that question.
So working capital, we at standalone level, we don't utilize working capital. I think we've got enough funds, so we are not utilizing working capital. At console level in few of our subsidiaries, including Max, we will be utilizing working capital. That would be close to less than 100 crore number, I think, overall. And balances towards the term loan, which will get repaid over next 3 to 4 years.
Yeah. So on an average, we keep repaying 35 to 40 crore rupees annually on a console level. The standalone, obviously, we don't have any long-term.
Right. I was looking at your Max, numbers, So correct to believe that the asset turns are less than 1.5 times because we'll be doing peak revenue of 2.5 billion on an investment of 175 crores. So my understanding was slightly higher asset turns for this capex.
No, you're very right. What we have projected is for the first 18 months, because it will ramp up to make more value added. So this particular plant, let's say if we had to 100% produce value added and sell 100% of the value added only, then this could give us close to, just give me a second. It can give us close to about 275, 280 crore rupees.
But that still is below 2 times of asset turns. Somewhere our understanding was this product category garners a much better realization profile.
I'll just add it here. This number you are looking, this is at the Max standalone number. When Max sells to Somany and Somany gives it to the dealers, this number is going to be better. Right? This you are referring to the disclosure which we have given. This is for the specific plant, right? Okay. This does not include the value which will come to Somany.
Okay. Got it.
The asset turn will be more than this.
More than 2 times, correct to assume?
I would not say more than 2 times.
It would be about 1.7 times, 1.8 times.
Right. And now that we are already done with 600 crores of capex in last 2 years, and bulk of it was on the value addition. So can we now see some improvement with respect to GVT and value adds for next 12 to 18 months?
100%.
Okay. That's it, man. From mine.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sneha from Nuvama. Please go ahead.
Thanks a lot for the follow-up. Any reason why our tax rate is higher?
Sorry to interrupt, Sneha. There's a lot of disturbance from your line.
Is it better now?
Yes, much better. Thank you.
I just wanted to check any reason.
Can't hear you, Sneha.
I was asking, is there any reason why our tax rate was higher during the quarter?
No, tax rate was higher during the quarter.
No, it's nothing like that. It's the same range. Just a small change plus minus. Otherwise, it's the same rates there.
Okay, sir. I'll actually check with you offline then.
Sure.
Thanks.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi, sir. A couple of questions. Sir, one is, would it be possible for us to quantify the number corresponding to paying agent arrangements? This number was around 59 crores on FY23 balance sheet basis.
Yeah. So FY23 number was lower because that was the time when we transited to, this arrangement, and going forward it has gone up.
So can you quantify how much would it be? Approximate first half or probably 9-month basis?
So I would say, let me explain in the other way around, Ritesh. So what happened in short-term borrowing number, 150 crore rupee was the number which was reflecting as a short-term borrowing, right? Whereas that number has come down to zero now. Because during Q4 and Q1 the transition happened, and then now it's completely under the trade payable arrangement, and nothing is reflecting in our short-term borrowing.
Okay. But still, would it be possible for you to quantify? If you can broadly give a number, or probably I'll take it offline.
Yeah, sure, why not? But I told you, it's a 150 crore number which was in our short-term borrowings in March 23, which is now zero.
No, I'm asking specifically for paying agent arrangements. So this number 60 crores you said would have moved up. So would that number be around 150 crores? That's how I should understand?
Close to 200.
Close to 200 crores. Okay, that helps. Sir, my second question is basically, if I just look at the last two FY23 and FY22 numbers, there is capitalization of cost. That number was 76 crores on 31st March FY23 basis. So possible to quantify that number on either first half or 9-month basis?
We can discuss it offline because we have not come out with a balance sheet for December period. So I can give you that number of it.
Okay, perfect. That's useful. Thank you so much. I'll join back with you. Thanks.
Thank you. The next question is from the line of Utkarsh Nopani from BOV Capital. Please go ahead.
Yeah, hi. Good evening, sir. Sir, my first question is that, if we see the sales volume breakup, our own manufacturing tiles sales volume has gone down in December quarter despite increase in our capacity. But there has been a sharp increase in the traded tiles volume. So can you please explain the rationale for this?
So the increase has been from Somany and also a little bit from the Somany Pietrale plant, so which is actually wholly owned subs. So both of them have shot up, so therefore it is showing in the traded, but it's actually deemed our own plant only. So when we refer to the capacity utilization lower in our own plants, we're only looking at our Kadi and Kasar, which are not.
Okay. Sir, just need one clarification on the capacity data which was mentioned in the presentation. As per our presentation, our capacity has gone up from 75 MSM to 80 MSM on a quarter-on-quarter basis. And we have also divested our stake in one of our JV in Somany Fine Vitrified in September quarter. So can you please provide clarity that why our capacity has gone up in December quarter?
Yeah, sure. So, Utkarsh, that's actually our access to capacity. That's not our capacity of 80 million square meter, which we talk about always. And that's because currently we are sourcing close to 18 million square meters. And then 62 million square meter capacity within our own plant and JV. So these two things put together give us an access to capacity of 80 million square meters.
Okay.
So what you are referring to fine, yes, this is after adjusting the fine divestment which we have done. But at the same time, our outsource number has gone up and max is also taken in January.
Okay. And sir, lastly, our net debt has gone down sharply on a YOY basis from 429 crore to 172 crore. But it is not getting reflected in our interest cost. Our interest cost has remained the same. Why it is so? So
I think just a few minutes back, the clarification was given. I just reiterate quickly. So it's more because of change in arrangement, wherein earlier we used to our line of credit, and that was reflecting as a short-term borrowing even at a standalone level, which was not actually a borrowing, it was a paying agent arrangement done for our suppliers, and interest cost is on our vendor's account only. We are not supposed to bear the cost. So that has moved from short-term borrowings to trade payable. That's why that movement in borrowing is appearing on Y-on-Y basis, but it's not actually the borrowing.
So the quarterly interest run rate is likely to go up post our buyback program?
So it should not, because buyback was done out of the surplus cash available with us. So it won't have any impact on our interest cost as such.
Okay. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Rishikesh Bhagat from Kotak Mutual Fund. Please go ahead.
Good evening. Thank you for this opportunity. So just want your thought, how are we thinking from the future CapEx point of view? So where I'm coming from, when I look at your peer, say closest competitor, I think clearly they are trying to create capacity or probably going ahead with CapEx despite the recent demand turmoil that we are seeing in the industry. In our case, we are, as you highlighted in the comment, that probably CapEx beyond Nepal, there is not much. I think when I look at your presentation, you are already at 83% utilization. So how are we thinking on terms of creating our own capacity?
Hi, Rishikesh. Yeah, very good question. So I would like to clarify that. The CapEx which we have done in the last 24 months, ballpark, is the same amount of CapEx which industry, my nearest competition, is done on a much higher base. So if you look at the same amount of millions of square meters which have come in for him as capacity versus us as capacity, ours is approximately 25 to 26% increase in capacity from, let us say, 24 or 28 months. I mean, I'm just giving you a ballpark of 24 months. So if we've increased capacity by about 25 to 26%, whereas his capacity increase has been slightly under 20%. So I have already made a capex of the same amount at a much lower base, right, in absolute terms, which means that what he is doing now this year, I have already done. So 12 to 18 months from now, we would probably be announcing our next capex for augmenting capacity. I hope I'm able to answer that question.
Sure. Thank you.
Thank you. The next question is on the line of Janish Karia from Antique Stock Broking. Please go ahead.
Yes, thank you for the opportunity. So if you could just give us some information about how January has panned out in terms of demand. And secondly, we are targeting a growth of 5 to 6% in the fourth quarter on a YOY basis. That is what you mentioned. So that translates into around 18.5 million square meter of volume. So how do we plan to achieve it in the fourth quarter?
And also has been sluggish, but we have grown in low single digits. So there has been a growth considering that we put a lot of pressure in December. So January from that point is slightly better, but still sluggish. But hopefully February and March should be even better, and we should be able to grow in the mid single digits.
I understand, sir, but if we are targeting a mid-single-digit growth on a YOY basis, that translates into high teen growth on a sequential basis, and considering Jan has very sluggish, any plans of action, whether we'll give additional incentives to dealers, any realization?
Much better than the first month of your quarter three, let's put it that way. If you look at it from quarter to quarter, it's been much better than October. And also from YOY, Jan we have grown. So we are hoping that, with the push of year-end and a lot of government spendings, etc., we should be able to be in growth and not be flat like we are in this quarter.
Okay, and last quarter we had given an annual volume guidance of high single digit. So considering the 9 months run rate, we are at 3 to 4% volume growth.
Yeah, so I don't see that happening because of quarter three. So we should be in the same range. If we grow at mid single digits, we should be in the same range as what it is now, maybe 1% better.
So that's helpful.
It's been an aberration this quarter. I have not seen this kind of quarter in some time. So But it's okay, part of the game. Not overly worried as long as we keep our focus on the balance sheet, keep our focus on our quality and the Max plant launching.
Understood. So just one last question on the margin front. We are very confident that we'll be achieving near 10% margin in this quarter.
Yes.
However, with the Somany Max plant coming online, do you think that with slight increase in the gas cost that you guided and the plant ramping up, the margins can be missed there compared to our range that we are giving?
No, we should be in the control as far as Max is concerned. I mean, the caveat, of course, is if something happens on the gas price, whether it goes up by 10 rupees or 15 rupees or something else happens, that's a separate issue. But in this range of 46 to 47, we should be under control.
Sure, that's helpful. Thank you so much and all the
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Somany for his closing comments.
Thank you, ladies and gentlemen. And like I said, extremely bullish going forward. The Max plant has come up very well, and we are looking forward to growth in sanitary ware, bath fittings, and tiles. Team is working relentlessly to make sure that we do much better quarter on quarter. And like I said, mentioned with the balance sheet discipline, we should only get better as far as our pricing and EBITDA is concerned. So very, very excited for the next year, and would love to welcome you on the annual results conference call sometime in May. Thank you.
Thank you.